Hello and welcome to this Monday's weekly market briefing. We've got a lot to talk about, but firstly, Thiel, Bezos and Zuckerberg join parade of insiders selling their tech stocks. As well as that, China blocks the use of Intel and AMD chips in government computers. As well as that, and finally, US and Japan plan biggest upgrade to their security pact in more than 60 years. We've got lots to talk about in the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. But the first article to talk about, of course, is on the topic of Thiel, Bezos and Zuckerberg. Now, key tech stocks insiders such as Jeff Bezos, Mark Zuckerberg and Peter Thiel are now selling hundreds of millions of dollars of their company's shares this quarter. This comes as the US stock market continues to make new all-time highs. Now, of course, we've been talking a lot about US equities at the moment and a lot about those tech stocks, which of course Peter Thiel, Bezos and Zuckerberg are very much invested into and have built their net worth from. So ultimately, what's happened with these tech stocks recently? What's happened with US equities recently? Well, ultimately, we've seen a very strong rally in the markets recently, of course, following the change in rhetoric from the Fed, it seems, ending off last year. And this also came at a time where, of course, the new developments within generative AI, such as, ChatGPT, was as a result accelerating the optimism around tech stocks, and as a result we saw a extremely bullish move take place basically within US equities, with the S&P 500 now reaching all-time highs and making new all-time highs from those areas. And the likes of Amazon, Facebook, that being Meta, and more importantly, tech stocks such as Nvidia, are doing extremely well at the moment. And that is something to be said about the current kind of movements within the markets. And it does seem like, according to this article, that these now founders, these CEOs of these key tech stocks that everyone knows, are now trying to offload their shares, their equity within these companies. And this, of course, could be a very worrying message for some of these investors, which are kind of looking at the current bull run and hoping that will continue many years into the future. Whereas what we're seeing here could possibly hint to the fact that we could be expecting a slowdown or even a sell-off in these tech stock indexes and even just US equities as a whole, as if these sell-offs do continue to take place, we're obviously likely to then see maybe some insider info come out around what's going on within these tech stocks for these investors or founders to start selling off their stocks. So very interesting scenario here. And of course, we will come to it once again on the charts later, where we will be analyzing the US 30, the Dow Jones, but also the S&P 500, which of course is the key US equity index that I think is most important to kind of keep your eyes on when we're talking about this kind of thing here. As this info is very interesting to note, because whilst traditionally you might just take a macro look at the US stock market, or look into the deep value of the companies within these indexes, ultimately sometimes this kind of insider selling of tech stocks, or other stocks even, is kind of a good indicator of what's to come for stocks. As as we'll get into, the last time we were seeing the volume of these sales from such founders was going back into 2021. So it's been quite a bit of time since we last saw this kind of panic selling, it seems. Well, not necessarily panic selling, but significant selling that's taking place. But arguably, of course, you could just note this as a fact of prices are rising within the stock market, and maybe this is just a short retracement with these key insiders kind of noticing that markets are reaching levels of overbought territory. There's just a short sell-off, a short retracement before the markets then continue to the upside. So whether you take this kind of article as a very, worrying message, or whether you take this article as kind of a more optimistic message to the fact that we're likely to now see a retracement, offering investors to then get back into the markets at a more advantageous price to then continue the US equity rally, which of course is based upon some very optimistic messages around the AI industry and that kind of thing. So definitely an interesting article to note here, and we'll get into it straight away. With these actions by such CEOs causing many to believe that markets are now peaking. The actual data shows that the ratio of corporate insider selling to insider buying is at the highest level since the first quarter of 2021. Shareholders have avoided sales last year due to depressed company valuations, it also seems. That said, some are also noting that the recent US equities rally has been driven by excitement over the rise of AI, with this now being expected to wane. Peter Thiel, the co-founder of the group Palantir, sold $175 million worth of stock this month, which marks his biggest sale since he offloaded $504.8 million worth of the stock in February of 2021. Similarly, Jeff Bezos sold 50 million shares worth 8.5 billion in February, and the Amazon chief executive Andy Jassy also sold $21.1 million worth of stock this year as well. So significant action from Amazon there. And finally, Mark Zuckerberg, meanwhile, increased his selling this year, and in February sold 291,000 shares worth $135 million, which is also his biggest sale since November of 2021. So very interesting actions being made by these key tech stock insiders, and of course this could be a good indicator of what's to come now for these overvalued tech stocks following a recent rally. So definitely keep your eyes on the topic of tech stocks, and of course we'll be returning to it near the end on the charts, where we'll be analyzing some key US equity indexes. That's all to talk about in this article though. Next article to talk about is more so to do with the topic of geopolitics, more to do with the topic of China and the US, where we are now talking about China blocking the use of Intel and AMD chips in government computers. Now China has now introduced guidelines which mean Intel and AMD chips will not exist within government PCs and servers. This comes in an effort to defend Chinese industry from US microprocessors and protect themselves economically and security-wise. Now, this is most certainly not the first time that we've kind of spoken about this issue or industry in particular. Of course, recently we covered NVIDIA unveiling their most recent AI chip, which of course is creating a great deal of optimism. But before that, of course, we have covered the issue of Chinese and US relations, which is also having a great effect on US-Chinese trade. We know that ever since the Chinese spy balloon over the USA incident, Chinese and US relations have been at an all-time low, and of course there's been certain efforts to kind of resolve this, but ultimately it does seem like between the Biden administration and the Chinese cabinet there is a great deal of kind of anger between the two, and a great deal of tension, and this is obviously also coming at a time of conflict around the world, which is adding to these world world tensions, which is certainly not helping the matter. Now, in regards to Chinese and US trade, we know that the US has blocked exports of certain goods, certain tech goods to China, in particular microprocessing units, which of course is a key component which is used in not only just computers and phones and that kind of thing, which are more consumer facing, but also weaponry, which of course both nations depend on greatly, and both nations are kind of adversaries within the geopolitical space. So that's why that's kind of a point of contention. And now what we're seemingly seeing here is China also kind of responding to that, and also kind of attacking the US in some way by basically blocking the use of these key processing units from US companies within government computers, which without a doubt is going to affect US industries, and is also going to affect the already strained US and Chinese relations. And this also is always coming amidst a great deal of tensions over the Taiwan Strait. Obviously, the more progressive party within Taiwan won the last election starting off this year, and as a result, there was a great deal of worry over how China might respond to that. We know that China has been, redeveloping and modernizing its military for some time now. That's expected to end in 2027, and China's made repeated claims against the sovereignty of Taiwan, has claimed that they will take back Taiwan if they can't militarily, if they can't do it diplomatically. So that's the kind of key worry around that, and we know that the US has kind of vowed support to defend Taiwan should anything happen around that. And so there's a great deal of tension between the two nations, of course, and so this is a very interesting topic at a very interesting time. Now, the strict guidance will also remove the use of Microsoft Windows as an operating system. Instead, government computer systems will use domestic options, with all of these moves representing China's efforts to now build up a great deal of domestic substitutes for foreign technology, which comes at a time of heightened tensions. The US previously to this had already imposed sanctions on certain Chinese companies, and had also legislated to encourage tech to be produced in the US whilst blocking the export of advanced microchips to China based on national security concerns. Chinese government agencies are now required to acquire safe and reliable processors and operating systems when making purchases. 2 of the approved Chinese-made chips were on the export blacklist. Now, the move away from foreign hardware will dent US companies like Intel and AMD in China. That's all to talk about in this article, though. Definitely keep your eyes on it. Next one to talk about, still on this kind of topic of geopolitics and Chinese-US relations, with the US and Japan planning their biggest upgrade to their security pact in more than 60 years. Now, the US and Japan are now making the largest upgrade to their defense alliance since 1960, and this comes a part of a wider move to counter China, with Joe Biden and the Japanese PM Fumio Kishida to announce plans to restructure the US military command in Japan, with all this being in an effort to strengthen operational planning between the two nations. The growing possibility of a Taiwan conflict is what is driving this upgrade, with the Allies wanting to strengthen ties to respond to a growing threat from China, in which both nations militarily would have to cooperate seamlessly. The announcement, however, would come at a time of weakened ties between the two nations, following the US president expressing his concern to the Nippon Steel acquiring US Steel move. Now, the move to oppose the acquisition was in an effort to boost public support for Biden in the lead up to the 2024 presidential election, but has instead soured the alliance. The move to upgrade their defense alliance follows a recent couple of years of Japan increasing its security capabilities and spending more on defense. The US and Japanese forces coordination has been hampered always by Japan having to deal with the US command based in Hawaii, which is 19 hours behind Tokyo. As a result, Tokyo has said that there's an urgent need for a very senior US officer in Japan. So a very interesting article to note here, coming at a time of heightened US-Chinese tensions and world tensions as a whole. Definitely keep your eyes on this topic. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where, of course, we are beginning on US equities, more importantly beginning off with the US 30, before then we'll move on to the S&P 500, talking about the tech stocks once again. But to begin with, we are on the Dow Jones, and as you can see here, price at the end of last week has seemingly sold off down to this key Fibonacci level of 38.20. We were expecting some sort of a sell-off, some sort of a retracement, as ultimately price was very overvalued. The kind of equities were very overvalued at that time, as represented on the RSI. That said, we weren't sure whether price would make its way back down to 38.20 or would make its way back down all the way to the 50%, where of course price is where that 50% does also line up with this key liquidity zone of a previous high on the chart. So should price make its way back down to that level, we could definitely expect a great deal of bullish liquidity to exist there, and then a great deal of reaction from that area as a result. So definitely keep your eyes on the US 30 at the moment, as whilst we're not getting an overwhelming amount of data this week, there's certainly some data which is coming out which will definitely be moving the US 30. Next to talk about, though, of course, is the S&P 500, which of course we need to talk about on the topic of the first article that we did note. And I want to zoom out a bit on the US 500 to put into perspective the great deal of bullish momentum that we've seen kind of arise within the tech stock index over recent months, and more importantly over recent weeks. So prices quite significantly moved away from those previous all-time highs and is continuing to just push higher and higher, and we haven't really seen that kind of retracement just yet. If we go back to previous areas on the chart, even during these long-term bullish swings, we've seen price somewhat retrace throughout all these periods, somewhat come back down, and then continue higher. Yet ever since we heard the kind of rhetoric change from the Fed, back in October or so, and we started to more so talk about when rates are going to be cut, price just hasn't stopped moving higher. And so, we could definitely be expecting somewhat of retracement to certainly take place within the coming months on the S&P 500, or at least that's what one would expect based on previous price action, and in line with that first article that we did talk about with these key US founders of these tech stocks selling off their portions of equity. We could definitely be expecting a retracement as a result of that, as when we do see these US insiders start to sell off, it is likely then that they're understanding that markets are at their highs and could be at their peaks as a result. So definitely expect some kind of retracement, I guess, on the US 500, but for the time being, just keep your eyes on any price action movements. Next to talk about, though, is the dollar, which has moved higher ending off last week, but kind of isn't interacting with any key levels at the moment. That said, we do have that liquidity zone there that you could maybe note as a key area, but overall, price is kind of just ranging around at the moment, and hasn't got a clear direction, so we're just looking for that to be formed. On Euro USD, price is now reaching the bottom of this kind of range. We're reaching the bottom of the market, where there is a great deal of bullish liquidity lying in this key area of support. So definitely keep your eyes on this zone and look for those bullish opportunities as a result. On pound yen, of course, price is still sitting around this 50% Fibonacci retracement level. So once again, there's still a great deal of bullish opportunity to the upside from this key zone. That said, of course, below that 50%, we do have some other key Fibonacci retracement levels of that 61.80 and that 78.60, both of which line up with some two key areas of liquidity. So price could definitely make their way down to there as well before we then see that move to the upside. So whilst we are getting not too much British data this week apart from a GDP figure, we could definitely see some moves take place as the price has been very volatile recently, but reacting with these key zones as well. Next to talk about though is Bitcoin, which of course has just been crazy recently, but is currently on the upswing to start off the week. It'll be interesting to see whether price can then push back to these previous all-time highs that were made not too long ago at the start of March. Next to talk about though is gold, which whilst it did see a kind of strong reaction at the start of last week, did end off quite weak and did make its way back down to near this liquidity zone. So possibly that's hinting towards a kind of turnaround in the market, where we have seen a great deal of bullish momentum over the past month or two, but now we're expecting a longer and larger retracement that could take place. So definitely keep your eyes on gold. Next talk about though, and lastly talk about in the charts, is oil. Which is kind of consolidating around, not making too many moves, and is just sitting within this key liquidity zone. Definitely keep your eyes on some news around the Middle East and also US news, as both of those kind of key news points are making a great deal of changes within the oil markets. That's all to talk about in the charts though. Lastly to talk about, of course, is the economic calendar, where we're getting a great deal of data this week if we can load that up. But firstly, once it's loaded up, firstly, we are getting the US and German consumer confidence figure, followed by the US durable goods orders figure, and then the British GDP growth rate figure. Followed by that, we're getting the US GDP growth rate figure and consumer sentiment figure, as well as the German unemployment rate figure. Followed by that, some Eurozone data with the French and Italian inflation rate figure, and then the US inflation data figure. And finally, of course, and most importantly, we're having Jerome Powell once again make a speech. So that's very important to understand the Fed's rhetoric better and understand their monetary policy outlook much better. That's all to talk about on the economic calendar though. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading week. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.